Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, January 19th, 2011. Well, the markets are having a down day, a very rare down day, and again, a couple things to go over in regards to this down day. First thing you have to know is its options expiration. Options expiration always yields a little bit of whippiness during the week as the institutions continue to whip the options up and down, trying to flush out the weak hands and get those options to expire as worthless as possible. Remember, the institutions are the ones that sell the options, at least a majority of them. Therefore, they're looking for those options to expire worthless. So to have a market that has gone up as much as we've had, generally you have to expect the institutions to try to push it down a little bit into options expiration. The general thought process, and this goes for all chief market strategists here at In the Money Stocks, is to look for a little bit of an opposite move in the opposite direction that the market has gone in recent weeks. So because we've gone straight up, generally you'd think that the market would pull back a little bit. Now, volume today is much better, although it is not heavy. Right now we've done 88 million shares. Yesterday we just did about 100 million for the day. So as you can see, with about an hour and a half remaining, we'll do well over that. We'll probably do about 125 to 135 million today, which is about 35% more volume. Interesting to note here, volume increase means market goes lower. When the volume is light, the markets will be held up by POMO, permanent open market operations, by the Federal Reserve, etc. All right, so just some interesting little tidbits there, what I want to talk about here. Now, as you can see, the market had a small gap down, but really started to sell here pretty dramatically. Again, the selling mostly because the market is searching now also for the next catalyst. All right, not only do you have the options X influencing the markets right now, but what's the next catalyst to make this market go up? All right, so Apple had good earnings. I mean, they were great earnings by Apple, but Apple Computer right now is actually just up $1.20. Why? Well, because Steve Jobs has left. And remember this is so important. Steve Jobs was in office for these earnings. So these earnings that were just reported yesterday were basically for the last 3 months. Actually, last 3.5 months going back. But bottom line is, he's gone now. So you can't recognize, you can't anticipate the same earnings going forward. And people are a little nervous about that. Now that he's gone, it's a whole new ballgame for Apple. At least that's what some people are worrying about. Therefore, there are some buyers, but Apple's not up as much as it could be based off those earnings. So that's not a catalyst. IBM, great earnings. I mean, IBM just a ripping higher here. Let's take a look at IBM. IBM continues at the highs of the day here. This is the one bright spot out there, and this is actually what's keeping the Dow Jones Industrial Average from being down 100 points today, in my opinion. Up $5 on IBM. It's a huge component of the Dow, which is only 30 stocks. So one stock in the Dow that's up $5 is a huge weighting. Probably 40 points in the Dow is just a direct result of IBM. All right. And again, the Dow just down 12 points right now, while the Nasdaq is getting hit hard, down 35, and the S&P 500 is down about 11. All right, so again, S&P, NASDAQ down sharply, but the Dow, which is only 30 stocks because of IBM, also because of Chevron. Chevron's just down 5 cents right now. Excuse me, Exxon's only down 5 cents. Chevron's down at about 50 cents. These key components are really keeping the Dow from having the big losses that the other indexes are seeing. All right, now let's go over here. We also had Cree report earnings. Cree, not good earnings, down $9 on the day. This is the daily chart where it closed yesterday, where it's opening or trading currently right now. So down big. Not surprising because LEDS had bad earnings last week, the same sector. So you can see the LEDS gapping down off of earnings last week and trading down, although it is getting a little bit of a pause today as it was upgraded this morning, I believe. All right, but that again was just a good indicator that Cree would probably not have good earnings as well, and the same chart now plays out on Cree. Look at the rollover. So these semiconductors, these LED players, very, very weak over the last week or so. We are seeing margins decline. We are seeing sales somewhat stall out, and again, that's very, very bearish for Cree and LEDS and some of these other players. All right, now a couple other things. Goldman Sachs had earnings. Goldman Sachs reported earnings, and as you can see, the stock is getting hit today, down about $6, and it's actually near the lows of the day. Looks to me like probably the target is now the 50 moving average at around 166.75. That's probably where it hits in the next day or so. And again, we do think that there could be a little bit more whippiness going into Options X now, which is Friday. And then again, once you're through that, it all depends on earnings. At that point going forward, economic news and earnings, anything out of Europe will become in center stage at that point. But right now, Goldman Sachs very, very weak. That's keeping financials weak. You have JP Morgan down 69 cents. You have Bank of America down 54 cents. And Wells Fargo down 58 cents, which also reported earnings this morning. So financials weak. Commodities commodity stocks for the most part weak, except for Exxon. Exxon's holding up. One stock that we nailed on the Pro Trader watch list, which is part of the research center, folks, and I do encourage you to join that research center. It's probably the best money maker for the money that you can find out there. Not only do you get swing trades and bearish and bullish Pro Trader watch lists, hot charts and alerts with setups and everything like that, but you're also getting education and knowledge. Just a massive amount of knowledge you have to go for, folks. It is huge. It is so important. So one of the trades that I put on yesterday afternoon when the market was still open was a short on MOS, Mosaic Corporation. It was at $85. 85, folks, yesterday trading. And again, what is it doing today? It's down $8. $8. I know a lot of people in the intraday stock chat that I talk to every day, and you can always join the intraday stock chat as well. They literally made $5 on this trade just by shorting it yesterday at 85. Most of them moved out around $80 today, but nonetheless, think about that. One day, $5. One day, 5. I mean, it's huge, huge. And again, Research Center had it. You had the intraday stock chat having that trade as well. These are just a small example of what you're getting. All right, we can take a look at some other plays out there. You have Verizon, which has been selling off. It's almost to that 50 moving average. That's a good little level to watch as well. We can take a look at some of the other trades out there. Amazon is getting hit a little bit today, down $4, back down. So we are seeing a wide sell-off across the board. Apple's just up 60 cents. That's coming in even more so now. Let's go back to the SPY and take a look at the intraday SPY. You do have some support coming down here. You have double bottom support and a trend line right at 128.20. If I zoom out, let's go find out where that comes from. Looks like pivot high, pivot low right here, and then right after that, below 120.20, at 128, you'll have a good level as well. So it looks like we're heading to the 128.20 level. That will be a quick scalp, and then afterwards, the 128 even number will be the big level to watch, and again, that's going to be the spot. All right, now there is something else I want to just recognize here that's kind of interesting to me that I'm just seeing as I'm doing this video, which I do think is important. If we connect this little low pivot and just draw it to the low end, you actually have a little interim level right here, which is maybe the one I'll wait for to scalp. If you connect this low to this low, and you get a level here at 128.12 to 128.10, maybe that's the level that's the scalp here, and then after that, a break of the even number of 128. I probably will skip this one right here at 128.20 and wait for the 128.10 to 12 area on the downside if we get there. Volume, again, is about 90 million at this point, which is fantastic. I mean, you're talking about solid volume, solid volume, which is what you want to see. Definitely what you want to see because the market is seeing some selling. Volume coincides with selling. Goldman Sachs earnings were not good. Cree was not good. IBM was very good. But at the same time, Apple was good, but with Jobs, it's not reacting in that sense. And again, Steve Jobs leaving Apple for an undefined amount of time. And that's the other bearish side of it. I talked about that in the nightly video last night, which is part of the research center, how Steve Jobs is leaving. Last time he left in 2009, but he said, I'll be back in 6 months. This time, there's no time frame, and that does have to worry Apple players here. Apple really has done everything they've done with Steve Jobs. Without him, or do they still have the same ingenuity? Okay, let's zoom in here. Let's just talk a little bit about a few other things here as we zoom in. You can see sharp losses. Notice the bear flags. Down 3 candles, pause candle, and then another 3 candles down. That's symmetry for you right there. Down, bear flag, down. Where does it go? The 200 moving average. I scalped that with the chat room today. We made some great money. Great money on the bounce. It went sideways. What type of pattern is this? Along the 200, hammering on the 200, which means the 200 is weakening. It's another bear flag, kind of an L shape here, a little to the upside. That's a bear flag, beautiful in spirit of. What does it mean? It's breaking down. It comes down here, bounces back to the necktie. Notice the necktie here, the 200 moving average crossing the 20. That's a necktie. That's a dead-on short. Dead-on short, and look at the market comes down to double bottom and is now pausing at the lows of the day. Right now, we have the Dow down about 19 points. NASDAQ and S&P, as I said earlier, are the ones getting hit, down over 1% on the NASDAQ and just under 1% on the S&P. Could this be the start of a sell-off? It's possible. It could be a little bit of a correction, but again, I don't trust that. I blame it more on options expiration, folks. And again, we have to see if it confirms. If we confirm tomorrow with another down day, then maybe it confirms a reversal trend. Maybe we have some downside. But right now, it's just one day, and who knows where this market ends. Maybe it rallies back up a little into the close, but you don't want to, jump to any conclusions at this point. I do have a short out there or 2 out there, which is good. That's good. But again, you don't want to necessarily load the boat. It's paying us nicely today, no doubt about it. But you don't want to load the boat until you get the signals. So just be aware of that as the market continues to make new lows of the day here. Volume is now 91 million. We should easily surpass yesterday's volume, and we'll watch that again. And notice again, volume coincides with downside. When you have light volume, 100 million, the markets are going to be neutral to positive. When you go to 120, 130, 140, 150 million, markets will be down. Just the way it works now, folks. Light volume can be propped, heavy volume cannot. Therefore, you're going to see selling when it's heavier volume because there's nothing to absorb. They can't absorb all those cells with the light volume. Okay? Now, let's just take a look at a couple other stocks here into the afternoon session. What are we watching? I would say there's not much in small cap land. Some of the small cap biotechs are having good days. PARD is having a very good day, up 11 cents, a little over 11 cents. Take a look at the pop, though. It took us right to the 200 moving average. This does bring up the alert for possible other movers in respect to biotechs. But again, with the weak market today, I'd probably stay on the sideline and protect yourself. Protect yourself. Just be a little careful. Let's see what happens tomorrow. If the market resumes its upward or neutral stance tomorrow, then yes, then you can start looking at some of these little biotechs that have pulled back off recent gains and some other players out there as well. All right. I think that's about it for today, folks. Again, just going back to the SPY, looks like the market came down just on top of that 128.20 level. It's right there now. That'll be minor support, but really I'm looking at this level right down here. If we get here, this is your scalping opportunity, and then after that, you're going to look for the next one below that, which is the 128 even number Pierce. Have a great afternoon. Join the Research Center. Get the guidance that the pros get. I mean, that's what we're giving out here. We're giving out the secrets, we're giving out the plays, we're giving out the profits, and we're giving out the education. Have a great day. Talk to you later.